Is VTI the best ETF that we can buy today? Hey folks, we're going to dig into that very question. To answer that, we're also going to cover what an index fund is. What's a reasonable rate of return that we could expect from VTI? Does it pay a dividend? What stocks are in VTI? And so much more. I'm glad you're here. Let's dig into it. So what is VTI? VTI is Vanguard's total stock market ETF index fund. It's almost identical to Vanguard's VTSAX mutual fund. Almost all the info I discuss here will also apply to VTSAX, with some exceptions mostly related to the difference between an ETF and a mutual fund. So just how big is VTI? In the first quarter of 2023, it had total assets of about $1.2 trillion. That would be 13 digits in total. That's comparable to the GDP of New England. In terms of countries by GDP, it would be number 16 on the list between Mexico and Indonesia. VTI is basically a country of money, and it comprises almost 14% of Vanguard's total book of assets, which is about 8 trillion. So why is it so popular? Well, VTI is a staple in most 2 and 3 fund portfolios, and there's a reason for that. There's even an entire community of Bogle heads devoted to VTI. Alright, real quick, you deserve the best content possible. If you feel I've earned it, hit that like button for me. It gives me that immediate feedback. It lets me know that you'd like more of the kind of content that I'm creating, and that will help it spread to more people. Okay, to set the stage, let's answer the following question. What is an index fund and what is an ETF? To answer that, let's dig into a bit of history real quick. First, an index fund. What is it, who came up with it, and why does it even matter? Well, it all starts with Jack Bogle, the author of the Little Book of Common Sense Investing and founder of Vanguard. When he founded Vanguard, it was in an era when the cost to invest could range from 1% to 3%. Mr. Bogle felt the industry could do better and wanted to focus on the average, everyday investor. In 1976, he revolutionized the mutual fund world by creating index investing, which allows investors to buy mutual funds that track the broader market. The takeaway here is that an index fund is designed for the average investor. Once ETFs came into the picture, that's when VTI came onto the scene. Okay, so the next question is, how does an index fund work? Well, to start, you cannot invest in an index fund. An index is simply a benchmark used to represent a larger group of stocks. A financial institution such as Vanguard will pay for a license, kind of like you have to pay for a license to use Microsoft's various products. They will buy this license from a research and analytics company such as the University of Chicago's CRSP, Standard & Poor, Morgan Stanley, Russell, or the Dow Jones. Since its inception, Vanguard has used the Dow Jones, Morgan Stanley, and now the CRSP Total Market Index. Vanguard or any other index fund provider's goal is to create a fund that perfectly matches that benchmark. This then results in a high level of confidence that the investor is getting the investment that they thought they were getting. It's very affordable, has a low turnover, and is a passively managed investment. Here you can see that VTI has a 1.0 relationship to the total market index from CRSP. This means that VTI has perfectly matched the CRSP total market index over the past 3 years. This isn't good or bad from a market performance perspective, but it does mean they've matched the index. If you own VTI, you're getting exactly what was advertised. Alright, so if that's not nerdy enough for you, I'm only getting started. What's an index ETF? Well, it's similar to an index mutual fund in that it holds a collection of stocks in a single fund that is passively managed. Passively managed just means that they're not churning through stocks left and right trying to create this perfect portfolio and generating commissions as a result. It's also similar to a stock in that it can be traded throughout the day even as prices fluctuate. This differs from a mutual fund which executes on any trades after the market closes. If an order is placed after the market closes, that mutual fund purchase will settle the following day. With a mutual fund, you never know the final price you're paying until the net asset value is calculated. The reason this might matter to you is because if you're wondering whether you should invest in VTI versus VTSAX, not all companies will allow you to buy an ETF or a stock at a fraction like they will a mutual fund. It's pretty common to buy a mutual fund for say $100 or $500 a month. That's clean and predictable. But for an ETF, not all vendors allow fractional buys. This means that you must come up with the exact dollar amount needed to complete the purchase each time or have a little extra loose change. If they do allow it, you will usually be able to do it during a trading session. Otherwise, you have to buy a round number of shares, often with a limit order, which means the maximum amount you invest will not be identical each time. Lastly, a mutual fund might have a $2,500 or $3,000 minimum, whereas an ETF is like a stock. You can just buy one share if you want. This doesn't matter with larger accounts, but if you're just getting started in investing, there is a bit of a barrier to entry. Hit me up in the comments and let me know if you prefer ETF ETFs or mutual funds. A huge benefit to buying an index fund is that the cost to invest, which is the expense ratio, is usually very low. VTI has one of the lowest expense ratios in the industry at just 3 basis points. 100 basis points is 1%. To put that in perspective, the average expense ratio in the 90s was just over 70 basis points. Now it's dirt cheap whether you go through Schwab, Fidelity, or Vanguard, or any other vendor. $10,000 invested at an expense ratio of just 3 basis points is $3. It's minuscule. So what are you getting when you buy VTI, and what's in the fund? You can see here the crisp total market index has 3,944 different stocks, and VTI has a bit more at 3,969. These numbers will vary as the market changes. It's a domestic fund, which means that it's a US blend of large cap, mid cap, and small cap stocks, with a weighting for everything. It's got everything from consumer discretionary and consumer staples to financials, healthcare, industrials, technology, and more. Right now, the highest value holding in VTI is Apple at nearly $67 billion, which makes up over 5% of VTI. The top 10 holdings of VTI make up about 20% of the total fund. If we go towards the bottom to a small cap holding, we can see that the holding has dropped down to 0.03% at about $350 million. This shows us how broad our exposure is to different stocks just by purchasing a single broad market index fund like VTI. Alright, as far as rate of return goes, since its inception in May 2001, it's averaged just under 8% in annual returns. The fund price started out as about $55 a share in 2001 and is currently sitting at just under $200. To give us some perspective on how it performs in hard times, let's go back 15 years. In 2008, when the market got its teeth kicked in, you can see that VTI dropped about 37%. This is very close to how the S&P 500 fared in 2008 when it dropped about 38.5%. That doesn't mean future bear markets will be the same, but it's a good indication of how closely it tracks with another index. 2022 was not a good year for the market, and similar to 2008, VTI and the S&P dropped about the same. They aren't identical, but given that the S&P 500 benchmarks the 500 biggest domestic companies, VTI probably won't be far behind. As far as dividends go, VTI does pay a dividend on a quarterly basis. In 2022, it came out to $3.78 per share, or a dividend of about 1.85%. Alright, now do I recommend VTI? YouTube is full of people giving stock picks, but I'm not a financial or fiduciary advisor in any capacity. It would be inappropriate for me to make any kind of a recommendation to you directly, even if I knew your situation. If you want financial advice tailored to you, I would recommend a fee-only advisor that is a fiduciary. A fiduciary is simply someone who is legally and ethically obligated to put your interests ahead of their own. With that being said, I can give you some broad statements about VTI, and you can make the decision for yourself. If you're a DIY investor who is looking for a fund that captures the market as a whole, costs almost nothing, and you can set it and forget it for 10, 20, or even 30 years, this fund might be a good fit for you. Lastly, there's a turnover rate of 4%. All that means is that the majority of the investments currently in VTI are likely to be in it a decade from now. Vanguard has a long track record of putting the customer first, and this fund is no exception. That's why it's going to be really important that you watch this next video on the screen to address the 5 worst pieces of financial advice.